This is Matthew Cratter from Trader University, and today I want to talk about Bitcoin hitting 63,000 for the first time in history. We're trading right around there now. It was trading above 63,000 just a minute ago, now trading at about 62,950. We've been talking a lot about how 60,000, this key consolidation level that was very similar to what happened around 20,000, is probably gone forever. Now, obviously, Bitcoin is volatile. We could dip down from here. But what we're seeing is a really strong breakout that's also supported by the fundamentals. The whole Pi cycle top turned out to be just a fake thing, as we talked about. Now, Bitcoin has been trading in a trading range roughly between, call it $44,000, $45,000 and $60,000, really getting knocked down every time it gets above 60,000. But now we have a definitive breakout. We're trading well above that 60,000 level after this very long, at least it seemed very long, call it 6 weeks of sideways consolidation, complete with a couple tests of the 50-day moving average, which Bitcoin bounced off quite strongly. So still in a very strong uptrend. The price of Bitcoin trading above the 50-day moving average and the 50-day moving average above the 200-day moving average. We're reaching the point here where Bitcoin is actually even giving the Swiss franc, a run for its money. And if it moves up just a bit more in the next couple of days, it will actually have a larger market cap. Bitcoin will have a larger market cap than even the Swiss franc, which really puts things in perspective. Right now, Bitcoin, the market cap of Bitcoin is larger than Brazil's entire stock market capitalization. These are just amazing numbers if you think about it. And we're still just getting started. The wall of money has not even arrived yet. We're still really in the early adoption phase. And one of the signs of this is that there's not even an ETF yet for Bitcoin. We just found out yesterday that Galaxy has applied for a Bitcoin ETF with the SEC. This is the 9th company to do so. And at this point, I'm reasonably certain that we will have a Bitcoin ETF, if not in the next couple months, by the end of the year. Anyone who followed the gold ETF in the early 2000s knows that ETFs are very good for getting money flows. This will be a great product. Whatever Bitcoin ETF is approved will be a great product for RIAs to offer to their clients, etc. And for people who can't figure out how to use Coinbase and control their own private keys and withdraw Bitcoin and do these things, buying an ETF, while it's not recommended, will definitely lead to huge money flows coming in to Bitcoin. We're now seeing even Barron's cover Bitcoin on their cover. Not a super bullish contrarian indicator cover, but just showing that even Barron's is finally waking up to Bitcoin. Interesting rumors that Walmart has been buying Bitcoin for its balance sheet in a similar way to what Tesla and MicroStrategy and Square did. If this is in fact true, and we'll find out almost certainly at their next earnings if they purchased a material amount that they need to disclose. But if this is true, this really marks a watershed moment in the history of Bitcoin where you have really a non-tech company or a non-tech specific company buying Bitcoin for their balance sheet. And once Walmart is doing this, you'll really have all the CFOs of the S&P 500 companies asking themselves why they're not doing this as well, especially the FANG stocks. It'd be very embarrassing for Amazon if Walmart added Bitcoin to their balance sheet before Amazon did. But this is the way the game theory works for Bitcoin. If you're enjoying this video and find it useful so far, I'd encourage you to hit that subscribe and like button, and also share this video with a couple friends who you think might be interested. Speaking of magazines like Barron's, it turns out that Time is going to be working with Grayscale, that runs the Grayscale Bitcoin Trust. They're going to be collaborating to come out with a new educational video series this summer. And as part of this, what's very interesting is that Time and the CEO have agreed to be paid in Bitcoin. And once they get this Bitcoin, they're not going to sell it. Time will actually be added to the number of companies that are going to be holding Bitcoin on their balance sheet. This is pretty extraordinary, actually, when you consider what a kind of conservative conservative in the sense of old financial publication or news publication Time is. And Time will also start paying its president in Bitcoin. A lot of talk about the Coinbase IPO. Well, I think it's very interesting, and it definitely is free advertising for Bitcoin. It's not something I'm that excited about. The prediction markets are suggesting that Coinbase is going to start trading today at around 100 billion market cap. I imagine it'll be even higher than this. I imagine it'll be 110, 120 billion. If you think about the relative market cap of something, it's not an exchange, but a big financial company like PayPal. PayPal currently has a market cap of 315 billion. Comparing Coinbase to something like this, there is certainly upside. You might make 50% on your money or 100% on your money as Coinbase continues its phenomenal growth over the coming years. But when you compare that to Bitcoin, I expect Bitcoin to do more than 50 to 100% just in 2021. So why buy Coinbase when you can buy Bitcoin itself? Especially these IPOs, they tend to be very hyped. It's obviously a way for founders, insiders, and VCs to get some liquidity. And so Coinbase was obviously an amazing investment a few years ago. It's reaching the point though where it's priced above the whole NASDAQ exchange, which has a market cap of 25 billion. I think Coinbase is probably a much better business with higher commissions, but I still think that Coinbase, as it has done historically, Coinbase, the stock, the investment, has massively underperformed Bitcoin itself. And I think that really continues. It's a bit of a distraction. That being said, it does add legitimacy to the space. Having a big IPO that will be covered on the nightly news and all the news sites. So this will lead to continued. It's very good for Bitcoin as well. And if you own Bitcoin, you don't need to worry about owning Coinbase. Besides, they're a very poorly run company. They have terrible customer support. I do use them to buy some of my Bitcoin. That being said, I'm in love with them as much as I'm in love with the local gas station. It's more a question of convenience. And I think Coinbase is fairly fully valued where it's going to come out. But we'll see where it starts trading. I do imagine it'll be north of 100 billion. Meanwhile, the real gold is that Bitcoin, and it's being withdrawn from the exchanges. Interesting statistic, just in the last 24 hours, over 12,000 Bitcoin have been withdrawn from Coinbase and Binance and Bitfinex and all the big exchanges. So these are obviously long-term hodlers. If you're a trader, if you're planning on selling Bitcoin in a couple weeks, it doesn't make a lot of sense to withdraw it from the exchange and pay those fees. Meanwhile, hedge funds continue to accumulate Bitcoin. Bitcoin is great because there's so many retail investors like many of yourselves who are able to get in ahead of Wall Street and ahead of the big guys, the big hedge funds. But now the nice thing is we have this tailwind, and we have all these billionaires and hedge funds who are actually paying much more for their Bitcoin than we have paid for ours. Dan Loeb, really smart guy, Third Point, revealed that they are holding Bitcoin. And hedge funds are they're a very imitative group. When one hedge fund starts to hold something and they go to their investment dinners and talk about it, it really begins to spread like wildfire, especially when something has a chart like this. It's really hard for hedge funds to stay away. So we have the Bitcoin ETF coming. We have corporations adding Bitcoin to their balance sheet, like possibly Walmart. We have the hedge fund money flows. And there's really no end in sight to this. Add pensions, endowments, central banks, sovereign wealth funds, all coming as well. Meanwhile, interesting chart here showing that a lot of investment funds, the flows, as we've been suggesting, would happen for probably 6 months. The flows are money flows are leaving gold and moving into Bitcoin. Gold has really been underperforming, as we've talked about, has not been a good hedge over the last 12 months against all the incredible money printing that the central banks have been doing. And investment funds, investment managers are waking up to this fact, selling down their gold and using the funds to buy Bitcoin. Meanwhile, Meanwhile, investment managers are still fairly skeptical on Bitcoin. And this was amazing. Even today, 3 out of 4, 75% of investors, professional investors in a Bank of America survey, think that Bitcoin is in a bubble, which is just absurd. And you can only imagine when these guys flip around and start buying. I've made a couple videos about this. People who compare Bitcoin to tulips. There's this famous chart right here where Bitcoin peaked in 2017 up here, and this chart was made after Bitcoin was crashing. What's funny, though, is there's now an updated version of this chart, or it's been updated by Bitcoiners, and this shows where Bitcoin is now. This is not what happened to the South Sea bubble or the Mississippi Company or the tulip bubbles. They never recovered. They all stayed down here. Meanwhile, Bitcoin has gone up here. So for professional money managers and professional traders to think this isn't a bubble, this is a bubble. These are people who've just simply not studied Bitcoin. They've spent about 5 minutes studying it and they don't understand it. But the good news, again, this means there are huge investment flows coming once even these professional investors figure it out. Meanwhile, we are not even yet in the parabolic phase. This has been a very weird bull market where it's been less volatile. We've had a lot of institutional money and corporate money buying the dips, which has really made this a much smoother trend. One of the ways you can tell you're at the end of a trend is you get a melt-up phase. And to give you an idea of what this could look like with Bitcoin, we had something similar from November 6th, 2017 to the peak on December 11th. So just over a month, Bitcoin went from 6,000 to close to, call it 20,000, 19,000, depending which, this is a weekly chart, which shows weekly closes. On a daily basis, it did reach 20,000, obviously, in late 2017. So it's really that last month of a blow off top where you can get Bitcoin going up 3x, 2x, 3x, 4x, and we're not even close to that. And this is one way I think I know that we're almost certainly going to get to 200,000 on Bitcoin by the end of the year. That being said, I'm not looking for a crash like this. I think these days of boom and bust for Bitcoin are pretty much over. We'll always have some volatility in Bitcoin. We could get 10, 20, 30% pullbacks. But what's really different now is we have this constant wall of money, this constant stream of new converts who will be coming into Bitcoin, who will be wanting to buy the dip. So I think that the dynamics have changed quite a bit, and there's a very good chance that we are now entering the Bitcoin super cycle, which I've talked about in a couple of videos. What this means is that pullbacks will be much more shallow and future halvings will begin to get priced in. This makes it very possible that we see $300,000, $400,000, $500,000 Bitcoin by the end of this year or early next year. And I think it's more likely that we see a continued melt up where Bitcoin does not allow people to get a good entry point. There's still so many people waiting for a pullback to 20,000 or 30,000 or 40,000. We're never going to see those levels again. And as people figure this out, there'll just be a continued massive FOMO. And I think even if we do see a blow-off top like this, it will not be a true blow-off top that retraces all the way back down as it did in 2017, 2018. I think rather what we're seeing is something that's much more like the internet. It's just increasing adoption, and combined with the endless money printing that central bankers, especially the Fed, will need to continue to do. It's really a multi-year, if not a multi-decade tailwind. So Bitcoin, I think, very easily will be hitting $1 million by 2024, probably much higher by then. I think people will begin to front run the halving, and we could see prices on Bitcoin of $2.5 million, $3 million by 2024. So if Bitcoin looks expensive here, it's going to reach the point. I think the median household income in the U.S. is roughly around here, 63,000. And so if an American household didn't pay any taxes and was able to put all their money into Bitcoin, they could buy one Bitcoin right now, assuming no living expenses, etc. We're reaching the point where, or we will reach the point in a couple months where Bitcoin really, a full Bitcoin becomes permanently out of reach for a lot more people. Again, this is something that I was talking about when Bitcoin was at 5,000 or 6,000, and it was much more within range. In the future, owning an entire Bitcoin will be like owning a really valuable piece of real estate. It's very scarce, and it's about to get really, really expensive, just like the best real estate in the world is really, really expensive. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.